It's recording.
Hi, Saadi. Thank you so much for volunteering your time to be here tonight. For those of you that don't know, Saadi is a CPA and he's going to talk all things money with us tonight. So save your questions till the end. There is a little presentation that Saadi would like to give to you all. Go ahead, and Saadi.
Well, thank you for having me, and thank you for the introduction. My name is Saadi Sabah. I'm a CPA, and I help e-commerce sellers streamline their accounting function and help with taxes and things of that nature. Uh, a little bit of background about myself. I've been working with e-commerce sellers for the last 5 years, specifically. I've seen just about any and everything you could name in terms of people working on a small operation to a large operation and everything in between. So I prepared like a bookkeeping demo, and it's a small presentation, and we go over the importance of record keeping, knowing your numbers, and how it could actually benefit you, help you grow. Let's see. So let's roll. So, oftentimes I'll see a lot of, especially e-commerce clients, they'll come to me during tax season or year end, uh, just assuming here's 12-month statements or someone's going to be able to figure out what's going on. Or even they work with another accountant, they have no idea what's going on with e-commerce, and they just assume everything's going to be nice and handy. So how many people have said, I'll deal with my books after the holidays or during tax season? A good portion. Okay. Uh, so most people think bookkeeping is just about compliance. I just a once a year thing that unfortunately no one likes to do. Uncle Sam wants all your money, the state wants your money. Everyone's trying to get it over, right? But the reality is it actually helps you navigate. Think of it like a business GPS. Like you wouldn't go, I mean, I personally wouldn't drive across the country without a GPS. I don't know uh if anyone would, especially nowadays. I know back in the day, even we had like MapQuest or something where you just print that out and you could roll with that. But um yeah, essentially bookkeeping, it's more than just compliance. It helps you navigate and it lets you make decisions comfortably, right? Whether you're going to spend on a certain thing, you want to get a warehouse, you don't want to do a FBA anymore, you want to do FBM. It's like, when do you make these decisions? Are you just going to base it off your bank balance, or do you even know if you're truly profitable? And then it's just, guesswork if you don't. Mm, So there are costs with not doing your books, and I like to call this opportunity costs. So you procrastinating on your books, you're flying blind for 12 months. You're just assuming, in the beginning for business owners, you wear many hats, right? You only focus is just to get the sales in, buy the inventory. You're doing marketing, you're doing the social media. You're the accountant, you're the lawyer. So you're juggling, and you're wearing all these many hats. So eventually you get to a point where you can just start slowly taking them off one at a time. Uh, and without bookkeeping, you're flying blind. You're not, tracking your data on Amazon or seeing those orange bars. That's not bookkeeping. Using just seller board to track your inventory or inventory lab even. Uh, that calculates your cost of goods and your inventory, but that's not even the whole picture. And then, you can't make an informed decision. I see a lot of times, especially for e-commerce sellers, things like to ramp up during Q4, right? The holiday season, everyone's spending money. And the biggest thing I have is I have my calendar booked all throughout August because everyone's trying to look for ways to get financing or a line of credit or more purchasing power to take advantage of the holiday season. But if you're waiting right before Q4, it's going to be too late. Um, and then you either overspend, you're in a cash crunch, y- and you'll have certain issues with even cash flow, right? So, maybe in the beginning with Amazon, you think you're making money, but half of it's tied up in Amazon reserve balances. So they're holding it for 2, 3 months. And next thing you know, you're buying everything on a credit card with like a 30% APY. Um, and you're not going to be profitable if it doesn't roll over in 30 days. So you can't spot any cash flow issues before it happens without knowing your numbers. Uh, I'll give you an example. A reseller was doing a FBA. He thought their product was profitable for 12 months. Next thing you know, it's January, February. You're reconciling all your repository reports from Seller Central, all that good stuff, and you see spoilage and inventory fees. Um, So all your profits essentially are gone, and now you're just playing catch up or even operating at a loss, God forbid. Um, mm, mm. And again, just to recap, it goes back, not knowing your numbers. Your biggest thing here in this business model is inventory. So problems could compound before you even notice it. You're gonna miss out on spotting cash flow issues early. And again, patterns of not having available cash for seasonal discounts or even favorable vendor terms. I don't know how many wholesalers you guys work with or you source, but sometimes they'll give you a discount like 210 at 30, right? So if you pay something within 10 days, you'll get a 2% discount. Or at year end, if there's a certain amount of spend you spend with someone, they'll give you a rebate, something like that, where that percentage could be huge. And you missing out on that percentage is you missing out on profits, and that's costing you money. It's opportunity cost. So if you didn't make money, you lost it. Um, and then, catch up bookkeeping usually results in missed deductions. You're rushing, scrambling to get everything ready for tax time. You're not tracking your mileage, your home office deduction. You're not accounting for, anything you paid for cash, things where you lose receipts, things like that. Another thing is, poor expense categorization. Audits haven't been so bad lately in the last few years, but there is a risk, right? And if you do get audited and you claim deductions without any supporting documentation, not only can they revert those deductions, but they're going to hit you with the back taxes, interest, and penalties. So that's you averting that is you saving. And the most popular one is everyone comes to me in December and say, "Hey, I made these all my profits. Where can I spend my money? Do I get a G-Wagon? Do I buy this? Do I go here?" I hear crazy things, but you being on top of your numbers, the time for tax planning is now for 2025, right? So if you had a large tax bill or you just hate tax season in general, you should be doing things now to help mitigate that. So you should have some sort of idea of what's going on in terms of your business. And then the biggest one is no one likes to make their quarterly payments. Nobody pays quarterly. I see it's a majority of over 50% of sellers is just put it off and they wait till tax time. But you're paying penalties on that for not paying quarterly. The IRS, they want their tax as you earn the income. Similar to like when you work at a W-2 job. When you get your paycheck, they take your taxes right before you see anything. Because they know the average person will set aside funds to pay their taxes. But for business owners, unfortunately, that responsibility falls on you guys, where every 3 months you have to make some sort of payment. And how do you know how much to make if you don't have no idea what you made? You might not even be profitable where you have, a tax liability. You won't know. Mm-mm. And then, and again, inventory is the biggest thing here. This is where I see people either they go bust really fast or they die very slowly. They think they're making money. They're rolling everything onto a new credit card, and then it's just like a slow death, if you will. They'll go bust for 1 to 2 years versus right away. You're not going to be able to track your business profitability. That's the biggest thing, right? Your gross profit. Seller board, inventory lab, they account for that. Um, but if you're not tracking your inventory accurately, it affects your whole P&L, all your financials. We don't even know what's going on. So example, just because seller board tells you you're profiting 5 to 10K a month doesn't mean you're actually profiting 5 to 10K a month. It may look like it, but then when you look at your bank account, you'll only, it's not matching up what you're seeing on the dashboard versus your bank balance, right? So it's being able to tie back into knowing why this dashboard isn't matching my bank balance. Mm-mm. Another one is like you don't account for interest rates after buying inventory on credit card, right? A lot of this is financed through personal credit cards for these ventures. So and if you do get a business credit card, you guys are a personal guarantor usually, so you're still on the hook for it. Eventually, the goal will be to get to a place where your business has some sort of credibility on its own, like establishing your Duns and Bradstreet number, building business credit, so you could get that financing without the personal guarantor risk. Because that's the whole beauty of an LLC, right? If you over leverage yourself or having a business and the company goes bust, you're not liable. But if you're a personal guarantor and your operations go bust, you're still going to be on the hook on the personal level. So you want to get to a point where your business can obtain financing as a standalone entity and not attached to you as an individual. And that all comes down to having financials, whether you go to a lender, a bank, an investor, etc. Another one is, you're selling on multiple channels, whether it's just Walmart, Amazon. I see Whatnot's getting popular now, and all these other platforms. You should be able to differentiate your sales channels so you know what's working and what's not, and then maybe perhaps doubling down on or allocating all your time to what's the most profitable. If most of your money is coming from these live auctions now, maybe it's time to experiment and not spend so much time doing these other things. You want to put your time where the money is, where you could get the highest ROI, right? You're not going to know that if you're just booking everything as income across 4 or 5 different channels. Mhm. And then again, just not knowing your fees. It's so easy to get caught up in these marketplaces. They have before you know it, it seems like every day is a new fee, storage fee, FBA fee, merchant fee, whatever the case may be, and they're just taking away money from you, the owner. So just having a clear and concise understanding of, what's going on with your income. Mhm. And then, cash flow Russian roulette, having no visibility into your actual working capital needs. Maybe some guys are starting off, maybe some people have warehouses, maybe you have payroll. Uh, you need to know how long can you survive if no money's coming in, right? Because that gives you time and time gives you options. Uh, And then also being unable to optimize payment terms with vendors, right? Again, I mentioned earlier, a lot of times vendors will offer discounts for paying early, but I see a majority of people can't do that just because Amazon holds your money for so long. Your money's tied up in accounts receivable, but you purchasing based off of your working capital, you're able to optimize that in terms of getting that favorable terms with a vendor, whether it's 210 at 30, 310, 110, whatever the case may be, you miss out. Mhm. And I mentioned earlier, oftentimes people wait to get their financials together when they want to get financing or a loan or go to the bank. Uh, and then you just, one, not having it ready, you miss out on the opportunity. So now it's Q2 or Q3, you're getting ready for the holiday season, and this purchasing power is now not available to you just because you decided to wait right before versus having it ready. Mhm. Real life example, client came in August for funding for Q4, potentially missing 40,000 in profits for not securing the funding. So missing out on that purchasing power just cost you XYZ, right? Um, so you save a couple $100 a month in bookkeeping, but now you just dodged 40K in potential profits because this wasn't ready. Mm-mm. And then, you just making business purchases based off of gut feelings versus data. I feel a lot more comfortable scaling into a warehouse if I know exactly what my profit is or cash flows every month versus me just assuming. I don't like taking those types of risks or even hiring another VA or putting someone to work, in the warehouse. Um, you not having your numbers, you're not gonna be able to make any decision without knowing if you could even afford to continue doing this. You'll have some sort of idea, but it's always going to be a guessing game. And then, let alone, you also got to put a value to your guys' time, right? So just the stress of dealing with this during tax season or getting this all together. I have clients that I'm still waiting on their books for the last 2 months. I'm hounding them, and it takes time to go back to do a year's worth of books because people don't remember what they wore yesterday, let alone where I spent my money 6 months ago at this liquidation event or whatever. And then it's you not being, you're not ad, it's not you not being, I'm sorry, you're not agile. You're not able to make a decision or pivot fast enough, right? So if you're not tracking your numbers and you're just throwing things on credit cards, uh, you could be accumulating a burden that you don't even know exists yet. You think everything's going well, but it's just the problem's getting worse and worse. Mhm. So the beauty of it, knowing your numbers, you make real-time decisions in a timely manner. You know your margins within 7 days after month end. You adjust your purchasing spend every month based on actual turnover. Are you tracking metrics? The biggest thing that no one knows is What does anyone here know what their inventory turnover is? How many days does it take them to turn over inventory when they make a purchase on average? Or their cash conversion cycle? How long does it take from sale to fulfillment to cash hitting your bank account? 30 days, 15 days? No one knows. So that's something very important. So you need to understand if it's taking you 60 days to roll over this inventory, but you're accruing everything on a credit card with, again, a 30% APY, you might not be profiting or not even know it yet. Or maybe worse, yeah, it's going in the hole, constantly digging yourself in the hole. Mm-mm. Yeah, and then it's proactive problem solving, right? You stop a problem from it becoming an absolute nightmare. You're not going to keep buying something if it's not making money anymore, versus you doubling up on that inventory order because you think you're profitable and now you're stuck with stuff you can't sell. Mm. And bookkeeping is the foundation for tax planning. There is no tax planning for business owners without knowing what you made. Otherwise, everything you do is going to be a guessing game. So does it make sense to buy that new vehicle for your business? What's the tax benefits? You paying your quarterlies to avoid the penalties. You knowing when it's time to switch to being taxed as a S corp versus being just a sole proprietor LLC. When is the time to make those switches? When can you make those decisions? You won't know if you don't know your numbers. And then growth, when I say growth with confidence, I mean you're going to be comfortable placing that large PO, or you're going to be comfortable hiring that VA or paying that top rep. And then it's a clear picture for investors or even banks, lenders, things of that nature. Maybe you have a private investor that wants to go in with you guys or say, hey, I have $100,000 laying around. What can we do? I want to invest with you. Show me your financials. Show me you're making money, and I'll lend you the money. If you don't have books, no one's going to give you a dollar. Mm-mm. And then there's always, again, I always like to say a problem's not going to fix itself. The sooner you face it head on, the better. As things accumulate, it just gets worse and worse, and the opportunity cost gets higher and higher. Again, like tax planning should be based off of prior historicals. Uh, Tax planning opportunities are time sensitive, right? Most times people wait till December, and there's not much you can do. Uh, there are there are huge tax incentives in the IRC and the tax code uh, that can be implemented, but not on a 30-day notice. So there's things that you have to visit and think of now for the next tax year. Mm-mm. All right, I think that's all for that. I bored you guys enough. Now, Q&A questions. Anyone, please fire away.
Here we go.
Andrew, do you have any questions?
Yeah, so how about cash back? Is that taxable income, or is that just like where should that
So,
go exactly?
the biggest thing with cashback is it should reduce most of your cashback comes back from inventory purchases, I'm assuming, correct?
Mhm.
Correct.
So that should reduce the basis in your inventory. Meaning, if you spend $100 and you get $2 back, you should be capitalizing $98 on inventory. And also, what that means is when you expense it to cost of goods sold, this should be at $98. So, long story short, it's not that it's taxable, but usually in most cases, it needs to be a separately stated item because e-commerce sellers, they double dip, meaning they'll write off $100 worth of cost of goods sold, not 98. Uh, and then they won't report the cash back. So you have two ways to do it. You're supposed to reduce or factor this in your cost of inventory. So you don't capitalize $100 worth of inventory, you capitalize 98. And essentially it's the same thing. Whether you report the $2 as income or you report inventory at 98 versus $100 because your gross profit went up by $2. So to answer the question, it's not that it's most likely it is taxable for you guys because I doubt anyone here is reducing the basis of their cost of inventory with the whatever you guys get back. If
Yeah.
if that
So
makes sense.
Yes, to me it does, but I have a bookkeeping background, so I'm just going to like put it in different terms if you don't mind, and then you can confirm what it
Yeah,
matches
please.
what you're saying. So we typically people do not factor in the cash back into the percentage off when we're buying, because we don't know that that's guaranteed, right? So if the cashback, like with a cashback extension, is what Andrew was referring to, not so much a discount in a gift card or something like that. But when you discount the actual discount, like say you got 20% off of, and you had a coupon or whatever, and that was the 20% off. You're not you already factor that in the cart, and that's what's going to reflect in your bank account. But if you are like you have a cashback extension on, Andrew, is this what you were talking about?
Yeah, like Rakuten, or for
Okay,
example.
not like 2% cash back on your credit card.
Yeah, no, just the Rakuten.
Okay, so Rakuten's giving you 2% off of $100 or 2% off whatever. Say the cart's $100. Um, we as sellers don't factor that in right there. And that's what Saadi's talking about. So if you do, which it's never guaranteed income from Rakuten, so therefore that's why we don't.
Which is better, and it's just better to recognize it when you receive it as like other income.
Yeah. Would we like I know in QuickBooks when you get that cash back and you go to categorize it, would you categorize it as um inventory where that's
Uh,
where why it came back or no?
I would categorize it as a sub account, like some sort of income or revenue, and it could just be usually I title it other income. You can do credit card rewards or
Mhm.
cashback rewards, but it's a sub account for one of the income accounts, uh, usually.
And for those of you that use Final Loop like we do, it that is an option too inside Final Loop. I know that, and you can't like create an option inside Final Loop like you can in QuickBooks.
Yeah, because they do the accounting, so that'll be taken care of by them.
Mhm. Um, I did have a question. So this has been coming up a lot in our community is how low should the balance be on your current credit card before you open a new credit card to do a balance transfer for continued 0% interest? Like, does it have to be zero or just less than your 30% utilization? What do you think would guarantee us to do that, and when should we do that?
So credit optimization, your credit has multiple factors between usage, history, payment, the number of the age of the accounts, things of that nature. Now, you want to just do a rollover the second your 0% APR period is running out. And if they let you do it, it doesn't have to be $100. You can max out the card. As long as you're averting that interest, you'll be okay.
Okay.
Now, of course, every person you apply for a new card with are going to want to see you have good credit. If you have, utilization at 100%, maybe you won't get approved for that new line. But that ultimately comes up to the bank or whoever's giving you this financing.
Did you have
So
anything to add on to that, Andrew?
No.
No? Okay.
looks like Brian has a few questions.
Yeah, I was just kind of letting everybody go. If nobody else has anything, I got a few. I'd like to hear about the Augusta rule. Is number one.
So the Augusta rule, you're allowed to rent out your space to your business for up to a certain amount of days. And that income is a deduction on the business side and tax-free for you as an individual. Um, what you want to do is probably get the fair market rates for a rental in your area on what the daily average would be. And then, to max that out, uh, it's 14 days. So then you'd claim that. Just make sure you have some sort of itinerary or something outlining why the business needs to rent out your space. What is it for? And then, that'll substantiate as documentation in lieu of an audit.
Is that 14 days per month or 14 days per
Per
year?
year. Per
Per
year.
year. Okay.
Per month would have been nice.
I know.
And what's the proper form in which you can utilize that? And what I mean by that is like how and who would you be paying if you're just paying the full rent already, or maybe even a situation where you're paying, you're living with somebody and you're maybe just paying them a certain amount each month. Yeah,
Uh,
how does that work?
so this would be outlined in the itinerary, but well, you would simply just reimburse yourself for whatever that might be. So let's say the fair market rate for your house is $200, and you rent it for 10 days. You can reimburse yourself $2,000 from the business, and that would be claimed as a deduction, whether you put it on the travel, business events, whatever you want to categorize it as. But it would be a write-off on the P&L, and then that money is it's a tax. It's almost like a tax-free distribution for you. Just goes into your pocket or whoever you're paying. They don't have to report it as income.
Can you go into mileage a little bit? A lot of us do, a lot of retail arbitrage where we drive around, maybe trips to the post office and all that.
So for mileage, you have two options. They offer you something called the standard mileage rate, or the actual method. The standard mileage rate includes things like depreciation, repairs and maintenance, gas, all that other good stuff, and they factor in as a one cost, meaning they'll give you, I think it's 70 cents a mile for 2025. So if you drive 10,000 miles a year on sourcing, doing business related stuff, that's a $7,000 deduction or write-off. And in most cases, the standard mileage rate will come out to a higher benefit than taking the actual. The actual would be like gas, repairs and maintenance, depreciation, and things like that. So if you have a mixed use vehicle, over 99% of the times, the standard mileage rate is the way to go. And when I say mixed use, that means you have a vehicle that's used also on the personal level and for business stuff. Take the standard mileage rate. It's usually always higher. Um, yeah.
To go a little bit further on the mileage part, vehicle. Um, so I have a couple of different LLCs. One of them specifically is like a carpentry business where I have a vehicle that's over, I believe it's what, 5,000 pounds or something. But I don't
Six.
really
Yep.
understand. I don't really understand it all.
So is the vehicle exclusively used for the carpentry business?
It is, yep.
So essentially, you're able to depreciate the cost ex on an accelerated basis in the year you place it into service. So if you bought a pickup truck that's 6,000 pounds, you put zero down, you financed it, right? It's January 1st, let's assume. The car's worth $50,000. You're able to expense it immediately, even though no cash left to your account, through Section 179 or bonus depreciation. And heads up, it's going to be back this year 100% again. Uh, looks like with this new tax tax bill that's trying to go past. So 100% bonus depreciation will be back. And that means, again, like I mentioned, you can put 0% down on a vehicle or a pickup truck or whatever the case may be, and essentially expense it all in the first year. So if you have $100,000 worth of profits and you buy a vehicle, zero down, finance the whole thing, you can expense the whole thing against your income. And now essentially you went from making on paper 100,000 to zero.
So basically, what I got out of that is it doesn't really matter the line of work you're doing. This could be for any line of work as long as the vehicle
Correct.
weighs over 6,000 pounds.
And it's exclusively used for the business purpose.
Okay. So I assume that's why a lot of big why a lot of companies will buy big vehicles or expensive like trucks and stuff. I assume, right?
100%, especially
Yeah.
during year end. You see the car salesmen's how they do in December.
Okay. And the last question I got is you started bringing up the inventory turnaround time. How would you go about factoring that or figuring that?
Well, if your books are up to date, it's a formula. So tracking inventory, it's all fractions.
Sounds
Let's
smart.
see. But you'd want to have your books reconciled in real time and on a month-to-month basis, and then you could actually get an accurate inventory turnover ratio. So the formula is it's cost of goods sold divided by average inventory. So you need to have some historicals, but you get your beginning inventory as of January 1st, uh, and then December 31st, uh, and then again divided by cost of goods sold. So just cost of goods sold over average inventory.
Sounds like this would be probably easier done with like wholesale items where you have like a constant replen. Probably, yeah.
It, yeah, it's possible for both. As long as do you have inventory on hand? Let's say at the beginning of the year versus the end of the year. Do you
Makes
carry
sense. Yeah.
inventory?
Oh, yeah, yeah, yes.
Yeah, so it could be easily formulated. You just need to have an accurate cost of goods sold figure, right? So whether you sell aboard an inventory level, as long as that number is accurate, you know what your inventory is at beginning of the year and the end of the year, you could get a turnover ratio. But you need to be in business for a year for this to mean something.
That makes sense. Anybody have any questions?
Anything else, guys? Diana, I'm sure she's gonna poke a little bit.
Um,
Andrew, go ahead.
I have a question. So, okay, hear me out. So how would you explain like hiring a CPA or when you would like need a CPA, for example, like what exactly do they do? I know like they help you like, you know a lot about tax stuff, but do you also file people's taxes or help them, or is it just like aligning them in their business and showing them where they're not performing well and what to do to fix it? Like what
Yeah,
exactly do you
s-
do you guys do?
so that's a little bit of a vague question. It's like talking to a doctor and saying, "Do you fix my feet, my eyes?" Right? There's different specialties, and people take different niches, if you will. Um, but yeah, I do personal and business tax prep, but not every CPA will do that. I do bookkeeping, again, but not every person will do that. Some people just focus on advisory. Some people just do audits. Again, it's a pretty vague question, and when is it time to hire a CPA? When you feel like this may be out of uh your hands, or you feel like you're not confident in what's going on. I wouldn't say it makes sense in the beginning for bookkeeping until you're rolling at least 10, 20,000 a month in sales. But from a tax standpoint, for someone to do your taxes, uh if if you're a W-2 filer, you don't have too much going on, it's very easy to do yourself. But if you have some real estate, you have this e-commerce business, and then other moving parts, it might make sense just to ensure an accurate filing compliance and potentially not missing any deductions.
Okay, so all CPAs do, like you said, like a little bit of different things, is what you're saying? They're not all like the
Correct.
same. Okay.
Yeah, I have some clients that they're CPAs that do their taxes, they only work in audit, believe it or not. Um, so it's people just thinking, a CPA just focuses on tax. That's really like 25% of it in terms of an accounting function.
Okay. Thank you.
At
Of
what
course.
point in a sole prop LLC should one consider going to Schedule C?
Or S corp?
S corp,
You mean?
sorry.
No worries. Everyone will give you a different answer, but it really depends on where you reside and where you're operating the business out of. Most common thing I see, uh, maybe someone will say 60 to 70,000. It'll be worth your while. If you go S corp, it opens up a whole can of worms, meaning now you have to go on salary, a W-2. Now you have payroll tax filings. You may open up UI insur like unemployment insurance. So and then there's increased costs for your accountant. So there's all these other indirects where you kind of got to value the benefit. Um, and when I say jurisdiction, you have to see where you are, because like for me, I'm based out of New York City. It never really makes sense to go S corp because I have local tax here, and New York City doesn't recognize S corps. Same thing with LA. So you just gotta gauge it based on the individual. But a general rule of thumb, I'd say at least 60, $70,000 in profits after everything's all said and done before you even consider it,
Thank you.
of course.
Somebody else have any questions?
When hiring a CPA, does it need to be within your state, or does one kind of fit all?
It depends. Usually it's more favorable to hire within your state, only because that CPA will be familiar with the state tax incentives and laws. Maybe there's credits, there's things going on. I do file in more than just New York State, actually. But it really depends on the individual. A lot of times people like to be client facing or see someone in person. Uh, but it's really up to the individual. You just have to inquire.
What about from a state like Florida or New Hampshire where we don't have state filing?
Oh, then any CPA would be able to get the job
Doesn't
done.
matter at that.
Yeah.
So it doesn't. Yeah, it doesn't matter at that point. Okay.
Any other questions, guys, while you have me? Mm.
Had you mentioned a service that you provide?
Uh, yeah, I do offer bookkeeping services, and tax prep services, and that's annual, yes.
If that's something you'd like to offer.
I could show, so I'll show you guys my bookkeeping firm. I don't want to, I really just wanted to do a Q&A on this call. I don't want to, uh, go over anything like that, but let's see if interested.
Yeah, I mean, we got you on the call, so
Yeah. So
I
my
know it wasn't the
bookkeeping,
purpose, but
yeah, so this is my bookkeeping firm. And what we do is I specifically work with e-commerce sellers, and other service-based entrepreneurs, things of that nature. And I could show anyone the demo, on my firm's dashboard, the platform, how it works, how we deliver the financials, and we could go over a sample financial report too. Uh, but the website's plutusco.io. Then you guys could always book a free demo or a consultation, and I could go over how everything works. But I didn't prepare for the demo for this. And I'll drop it in the chat. So if anyone wanted to book a one-on-one call, I could show you guys. And then in terms of, I could show you, let's see. Mm, Yeah, so what you get with us is a monthly CPA verified financial package. And what that means is just your profit and loss, your balance sheet, your cash flow statement. Uh, we work together in terms of making your estimated tax payments. We include a advisory with every quarter. And we have a whole onboarding process where we connect all your accounts, your sales channels, your QuickBooks, link up all your business checking accounts, your credit cards, uh, and we furnish everything from there on an ongoing basis. And then
so
there's more.
that's a whole, I'm sorry, that's a whole portal that you're offering right there for like bookkeeping tracking and such.
Yeah, I mean, I have a dashboard where we communicate and we upload all the client documents like the monthly P&Ls, the balance sheets, and then we go back and forth if there's any questions in regard to it.
Allah has a question.
Shoot.
You want to go ahead, Allah?
I am Aula. I'm sorry, I'm driving, so I can't turn my camera on. But I have a question. I have a CPA slash accountant, and I have him like for a few years, but I don't like his way because he just sent me questionnaire in and list where I have to answer yes or no, what I have or what I don't have, and then he just basically file it from my name. But the problem is that while I do these questions from him, I literally Googling a lot of time and watching a lot of YouTube videos on how I should file it for my CPA, and then I paying him this amount of money for actual filing. And I'm not sure if it's supposed to be in this way, because other people told me that they just collect all what they have and they bring it to the CPA. But I just literally read a lot of stuff how to prepare form for my CPA. And so I'm just not sure if he's just doing the right stuff or I'm just, being fooled.
So I have no problem giving you a second opinion if you want to schedule another follow-up call. I can review your tax return, just make sure everything's in line, and we could take it from there.
Thank you.
Of course. Feel free to message me in Discord, and I'll give you my information.
I have a question. What's something that most people miss, yeah, like for a tax deduction, which they should be paying more attention to?
The biggest one would be the mileage and the home office deduction when starting out. A lot of times, e-commerce sellers, they're operating out of their home, their basement, whatever the case may be. And that's a huge missed one. And then also just prepaying quarterly, if you know you're making a profit, you should be allotting some sort of your money to taxes, because then you're gonna avert the penalties. So that's the biggest miss. People wait till the end of the year to pay everything. When they could just prepay quarterly, it'll be the same result, except you're gonna save money. And then utilizing the home office deduction, maybe mileage. A big mistake I see is a lot of times, especially for new sellers, they'll register for like a reseller's permit or a sales tax permit, whatever you want to call it, and then they don't file anything. And next thing you know, you get a letter from the state saying you owe, money in taxes for money you never made when Amazon does everything for you. So just being aware that there's compliance costs for having a business, for your LLC, whether it's annual report. Every state has some sort of recurring compliance for an entity. So I'd say one thing I see most new business owners make as a mistake would be not staying on top of their compliance. For like Florida, for example, I had someone I've been reaching out to file their annual report with Sunbiz before May 1st. They didn't do it. They reached out to me May 3rd, and now next thing they're paying a $400 late penalty for not filing on time. So there are costs for you guys making a delay, especially in terms of compliance. When you have a business, just think there's compliance costs and things to be on top of.
You keep mentioning the paying quarterly. Is there an amount, like a special number, like a magic number that you can kind of just like put aside percentage wise, maybe like monthly or
So the way to gauge it would be it depends on your AGI, but you would want to pay if your adjusted gross income is 150,000 or less, if you just prepay 100% of last year's tax liability, that's what you could go off of. And if it's more than 150,000, you have to prepay 110% of that. So what does that mean? If last year I paid $10,000 in taxes, this year I'm expected to prepay quarterly at 10,000. So every quarter I'll pay 2,500. But if my income is over 150,000, I have to pay 110% of last year's tax liability to avoid any penalties. So that would be 11,000 this year. So it would be 2,750 every quarter. So you kind of base it off of last year's. And as long as you, even if you had a record-breaking year, let's say one year you made 100, let's say one year you made 100,000, the year after that you made 500,000. As long as you paid 110% of the last year's liability, you won't incur any penalties. It's a safe harbor rule.
What about for a single member LLC? Because we don't have to pay quarterly, correct?
No, you have to pay your estimated taxes on the individual level based off of the LLC's profits. So the LLC's pass through by default, meaning you tax the sole proprietorship. You'll file like a form Schedule C, but you pay estimated taxes on the individual level because the entity and the LLC are the same in the eyes of the IRS.
Okay, so the quarterly is that for just like S Corp and other different.
No, it's for you as well if you have a LLC and your tax is sole proprietor and you're profiting. But it doesn't even have to just be for the business. If you're trading stocks, you're making a profit, you have to prepay quarterly and things like that, right? Any source of income if you're making on the side, they want their piece.
I can't think of anything else. Does anybody else have anything?
Mhm. Yeah, I know taxes is a boring subject and everyone wants to avert it, but let's see.
I'm just finally now, I'm like 95% done my last year's taxes. I'm working with somebody right now. I put it off so long. I was like, I will never let that happen again,
Mm.
ever. I will never do that again.
Yeah, it's
Nope.
at least as long as you learn from it and fix it going forward, it's good. But yeah, it's just a nightmare just dealing with what happened last year. Again, I can't even remember what I wore yesterday on top of my head. All right, guys. If that's all, thank you so much for having me. Please always feel free to message me any questions in Discord. Even if it's, private, feel free to message me directly. If it's a question in general, please drop it in Discord again so everyone can see it, and we can go from there.
Perfect. Thank you so much, Saadi.
Thank you guys so much for
Yes,
having me.
thank
I
you.
appreciate it.
Thank
Thank
you.
you.
Have a good night.
Thank you.
Talk soon. Bye.